Hi, I'm Julien, Senior Vice President for Investment Sales with JLL Hotels and Hospitality Group. Following the reopening of the Chinese border, mainland China has surpassed Indonesia to be the leading source market last year. In the first half of 2024, the top source market for tourist arrival were mainland China, Indonesia, Malaysia, India, and Australia. Among the top pre-pandemic source market, Japan remains the only one yet to fully recover, mainly due to the weakened Japanese yen. Compared to the same period in 2019, June 2024 saw a remarkable 32% surge in average daily rate and a 25% increase in overall revenue per available room, according to the Singapore Tourism Board. With 80.7% occupancy in June, Singapore remains the highest occupancy level among Asia Pacific, though these numbers still fall slightly below in June 2019 figure of 86.1%. We expect to see several exciting new and refreshed hotel developments shape the hospitality sector in Singapore this year. One of these additions is Alma House, an 83-room service apartment complex in New Baru. Developed by the Lo and Behold Group and Sunray Group Holdings and managed by Project X, this project has transformed the former Nanshan High School into a nostalgic haven for travelers. Another exciting project is the Standard Singapore, a 143 boutique hotel at Orange Grove Road that is going to open next quarter. Similarly, QT Singapore, previously known as the Hotel Telegraph, is expected to reopen its door in September, marking hotel chain EVT's first QT property outside of Australia and New Zealand. And finally, the well-anticipated Raffles Sentosa Resort and Spa Singapore is set to open its door by the end of the year. Developed by Royal Group, the luxury resort will feature 62 private pool villas. With 4 transactions, the hotel industry enjoyed an upswing in transaction activity in the first half of the year. Despite the high interest rate, 3 of these transactions were instigated by private equity groups who prioritize generating immediate returns on investments, as opposed to high net worth individuals or family office who are focused on capital appreciation. These properties had experienced a prolonged period on the market, but the sellers were able to successfully conclude deals with buyers at a favorable prices. This is thanks to the positive sentiment over the robust performance of the Singapore hotel market despite prevailing global economic conditions. And these transactions are expected to take advantage of the limited influx of new hotel supplies in the coming year, 0.6% year-on-year, against a rising occupancy rate and stabilizing cost. Looking ahead, hotel valuation in Singapore is expected to remain resilient, and we can anticipate a surge in transaction activity in the second half of the year.